Do you want to make money? Right. Of course, everybody wants to make money. If you are not running a business, at least you join them as partner or as a shareholder by buying their shares from the market. You thought buying a share is like fill it, shut it, and forget it, meaning you invest in blue chips and forget the market. Because, anyways, the company will perform because they are blue chips. But to your disappointment, your share value is crashing. At times you wonder why whatever you buy is not making money. Your friends, cousins all say they are making money. But how? You have done the fundamental analysis, technical analysis, and even candlestick study. Now, I am telling you to brush aside all those technical jargons. Don't go for any complex calculations. Actually, there is only one simple important factor which stops you from booking profits. That factor only stops you from selling your script in the market at the right time. Believe me, that is so simple and valid. I know you are so eager to know that simple secret which nobody talks about. Please watch the video till the end as we reveal a very simple and absolute secret of why you are unable to book the profit. Also, you watch till the end how the market operates through a hilarious story which no book, no course has ever told you so far. Let us go into the video. Whether you are new to the stock market or have been investing for years, this one secret could be costing you more than you think. Let us take an example. A guy bought a Tata Motors at 300 rupees. He touched 1200 rupees, but he was not selling to book the profit. He was waiting for the share to go up, so he held on. Now it is at 600. He is now unsure whether to hold, sell, or buy more. But you be sure, this video is not about Tata Motors. This is about your mindset. Yes, it's about your secret psychology. I am not saying he is not selling the share is his biggest mistake. It is something else. The mistake was he has anchored his emotions to a number. What? Where is the play of emotions here? Is it not a pure play of number, you might ask? Let us break it down. So, when Tata Motors hit 1200, his brain locked that price in his mind. He benchmarks that price, and from that point on, anything lower feels like a loss. Even when the price slips to 600, which is still 100% above his purchase price of rupees 300, he is refusing to sell and book the profit because his brain locked with the one-time value of 1200. This is called anchoring bias, which traps your decisions. Like ship anchored on the sea, you are stuck with the number 1200. In 1975, psychologists Daniel Kahneman and Amos Tversky discovered humans are not really rational. They are emotional. For example, the moment we see a price, any price, our brain treats it as a reference point for everything that follows. It means anchoring his emotions to a number which is benchmarked in your brain. It makes you blind to present value, and you become a prisoner of past numbers. Now, add another sneaky psychological trap called the endowment effect. When he bought Tata shares, he did not just buy a share certificate. He is just owning it. He attached emotion to it. He made it personal. It is his chip in the company. And the moment something becomes yours, you become possessive and you tend to overvalue it. Yes, but irrationally. So you hold on the share longer than you should because selling it feels like giving up a piece of your identity. Here is the paradox. When the stock is already with you, 600 feels too low to sell. You don't want to give yours for a low price. When you don't have that stock, it is like any other and 600 feels too high to buy and you don't want to own it. That is paradox. Same price, different emotion, same irrational trap. So, what is the solution? A simple acid test. I asked him a hypothetical question. If he did not own Tata Motors, would he buy it today at 600? If the answer is yes for buying, then hold, because he sees a future prospect. If the answer is no for buying, then sell and redeploy that capital better. The market doesn't care and be polite and courteous and obliging, like for what price you bought, how high it once went, and how long you are holding it, etc. It only asks, is this the best stock for your money right now? If not, move. No guilt, no grief. Because the truth is, you can never sell at the top. You can never buy at the bottom. But if you master your mind, you will always protect your capital. That is how wealth is built, not by holding tight, but by letting go at the right time. Endowment effect clouds your judgment. Emotional attachment kills your returns. Escape all three by asking one honest question. Would I buy this today? Over 95% of investors underperform this question. Not because of bad stocks, but because of bad psychology. Learn the game or be played by it. Market forces will play its own game by the strong players. Do you want to understand the market dynamics in simple terms? Watch this simple monkey and money market story. There was a village adjoining a forest, which is full of monkeys all over. You can see them on the treetops, on the hillocks, and on the banks of the river. Sometimes monkeys are spotted in the village also. One day, a merchant visits the village and wants to buy 200 monkeys for a price of 200 each. The village head agreed to sell them. The merchant came again next day and wanted 300 more monkeys, and this time for a price of 500 each. The villager was happy and sold the monkeys. A few days later, merchant came back again and demanded 500 monkeys for a price of 1,000 each. The villager wanted some time to catch monkeys, and the merchant agreed. After some time, the deal was completed. The merchant indicated he might need later another 1,000 monkeys at a special price. The villager was very happy and was dreaming to make a big fortune for that deal. But he explained catching monkeys is very difficult as their number is considerably reduced. But the merchant insisted that he can wait long, and he had offered a price of rupees 5,000 for each. The villager could not believe his ears, and he immediately agreed for the deal, as he thought he can catch monkeys from nearby area as well. The villager from next day onwards started hunting and roaming in the forest and the hillock, but could not get any monkey. The deal dream was driving him crazy to far off places and was tirelessly searching by perching on the trees. But he was disappointed in his search. Next day, he was sitting on the village bench, tired, wondering how he can fulfill the deal. As the luck would have it, there came a different merchant selling monkeys. The villager jumped at him, thanking God. He was God sent. The new merchant was selling the monkeys at rupees 2000 and he had only 1000 of the monkeys. The villager wanted only 1000 monkeys to fulfill the deal. And so he bought them for 20 lakhs, anticipating when he sells at 5000, he will get 50 lakhs. He was housing the 1000 monkeys and watched closely, even in nights, without sleep, expecting a bounty. The day came, the merchant did not come. Next day, the merchant did not come. The day after, the merchant did not come. No, he never came after that. He disappeared. The villager was cheated. The merchant created artificial demand for monkeys, and suddenly he dumped the monkeys back to the villager through his partner. Now, no one was interested to buy them, and it was a total dead stock. I wonder whether share market is also dictated by big brokers creating artificial demand on a wholesale trade, creating a bull market. Poor and gullible investors making all the analysis, reading all the reports, and listening share experts in TV shows, carried away by the candle and stick, and fall like a moth into a flame. You are left high and dry as to what happened to all the intrinsic value of the company and the share. All right, that's a wrap on the anchoring bias. If you have ever held on to a stock just because it used to be higher, now you know your brain might be playing a tricks on you. Thanks for hanging out with me. If this helped you see investing a little differently, give it a thumbs up, hit subscribe, and share it with someone who is still waiting for the stock to bounce back. Got a stock you have been anchored to? Drop it in the comments. I would love to hear your story. Until next time, invest smart, stay curious, and don't let old prices hold you back. Thanks for watching till the end. Please like the video, comment, subscribe.